The text came at 3:47 a.m. I need to tell my wife I lost our house deposit. All of it, in 3 trades. This wasn't from a gambling addict. It was from a brain surgeon with a 158 IQ who understood the market better than anyone. A quick warning, before you keep watching. This isn't another get-rich-quick video. In fact, this is a Don't Go Broke Smart masterclass. What you're about to see is designed to be uncomfortable. It will expose your most expensive weaknesses, challenge your deepest beliefs, and you'll probably want to punch me through the screen at least 3 times. If you're looking for a magic indicator or a secret strategy, click away now. But if you're ready to finally confront the real enemy, the one staring back at you in the mirror, then let's begin. Chapter 1. The Intelligence Trap. Smart people fail at trading for one devastating reason. They think intelligence equals edge. They approach markets like a puzzle to solve, a code to crack, a system to outsmart. But here's what Stanford won't teach you. The market doesn't test your IQ. It exposes your ego. And the smarter you are, the more expensive that ego becomes. Jason was that surgeon, top of his class, published researcher, the guy who color-coded his entire life. He treated trading like surgery, precise, logical, controlled. First position, analyzed for 72 hours, fundamental thesis bulletproof, entry perfect to the penny. The stock dropped 5%. Temporary mispricing, he told himself, adding more, down 10%. The market's irrational. He tripled down 20%. This is manipulation, quadrupled the position. 3 months later, down $127,000, Jason finally understood. The market wasn't wrong. His need to be right was bankrupt. Stop. Before reading further, answer this. When was the last time you added to a losing position because you knew you were right? Write the number. Feel it. Here's the truth that will save you thousands. Intelligence becomes a liability when it convinces you you're above the rules. That stop losses are for amateur traders who don't understand value. That averaging down is building a position, not denying reality. But the market is a tyrant with perfect memory. It doesn't care about your degree, your analysis, or your IQ. It only cares about one thing. Can you admit when you're wrong faster than your account bleeds out? The shift that changes everything? Replace "I'm smart enough to figure this out" with "I'm humble enough to follow rules." Because in trading, humility pays better than Harvard. Your edge isn't in your intelligence. It's in your speed of admitting ignorance. Tonight's assignment. Look in the mirror and say, "The market is smarter than me." If that stings, congratulations. You just found your most expensive weakness. Chapter 2. Meet your 2 traders. At exactly 9:29 a.m., David's personality splits in half. The calm, rational person who made a trading plan vanishes. In his place, a sweating, clicking, desperate stranger who breaks every rule David swore to follow. This isn't weakness, it's neuroscience. And until you understand it, you'll keep handing your money to your worst self. Right now, 2 completely different traders live inside you. The architect, patient, systematic, waits for A-plus setups, honors every stop, reviews mistakes without emotion, trades like a sniper with unlimited time. The teenager, impulsive, dramatic, FOMOs into momentum, moves stops because it's about to turn. Revenge trades to feel better, trades like it's a video game where you can respawn. Every single trade is a battle between them. The architect sees a setup that's only 80% there and waits. The teenager screams, "Close enough! It's already moving! Everyone else is getting rich while you sit here. Guess who grabs the mouse when real money's on the line?" This isn't weakness, it's evolution. System 1, fast, emotional, kept your ancestors alive when tigers attacked. System 2, slow, logical, evolved later for complex decisions. When money triggers survival instincts, System 1 doesn't just take control, it takes hostages. The teenager's calling cards, checking P&L every 30 seconds. The architect checks once at close. Sizing up after losses, teenager trying to fix it. Closing winners at break-even, teenager terrified of giving back lunch money. Adding indicators until the chart looks like a Christmas tree. Teenager thinking complexity equals edge. True story, I once watched myself, literally watched like an out-of-body experience, market buy TSLA at the exact top after swearing I'd wait for pullback. My architect had made a plan. My teenager executed a panic. The solution isn't suppressing the teenager, it's giving the architect explicit control. Before each session, write, "Only the architect trades today." The teenager can watch YouTube. Name your trades out loud. This is an architect entry, or admit the teenager hijacked this one. Sounds insane? Good. Sanity hasn't been working. This week's experiment, track why you made each trade, not what happened. You'll discover something terrifying. You've been funding your teenager's tantrums with your retirement money. Want to know which trader is winning? Check your results. The architect builds wealth slowly. The teenager destroys it quickly. Choose accordingly. Chapter 3. The loop you can't see. Sarah swore she'd never chase another trade. She wrote it in her journal, underlined it, added exclamation points. 6 hours later, she market bought NVDA after it had already run 8%. As she clicked buy, a tiny voice whispered, "You're doing it again." She clicked anyway. This isn't stupidity. It's a loop, and until you see it, it owns you. The trading loop from hell. 1. Trigger, miss a move while in the bathroom. 2. Emotion, FOMO mixed with self-hatred. Action. Chase the next thing that moves. Result. Buy the top, sell the bottom. Story. I need to be faster, better, and different. Belief. Missing out is worse than losing money. Repeat. Until account reaches 0. This loop runs below consciousness like malware. You think you're making logical decisions, but you're actually playing out emotional patterns installed by previous pain. Your brain isn't optimizing for profit. It's avoiding the specific flavor of suffering that hurt most last time. Pop quiz. What's your most expensive loop? Miss move, chase, lose, be faster. Take loss, revenge trade, bigger loss, get even. Small win, overconfidence, give it back, stay humble. Here's the kicker. The loop feels like thinking. That urgent need to do something masquerades as analysis. The voice saying you're missing out pretends to be wisdom, but it's just your pain looking for relief through repetition. Breaking the loop requires pattern interruption at the emotional level, not the logical level. When you feel that familiar urgency, the chest tightness, the mouse finger twitching, the desperate need to get in, stop. The 2-minute circuit breaker. 1. Push your chair back from the desk. 2. Set timer for 120 seconds. 3. Ask, am I trading my plan or my pain? 4. Only return if the answer is plan. One trader told me this protocol saved him $50,000 in 6 months. Not from winning, from not losing on emotional loops. Write this formula now. When I feel emotion, I usually destructive action. Today I choose better action instead. Example, when I feel left behind, I usually market buy anything green. Today I choose to write down the setup and wait for the next one. Your loops are not your destiny. They're just your history on repeat. Time to change the channel. Chapter 4. Why Success Feels Dangerous. Mark had his best trading week ever. Account up 12%. Perfect execution. Should have been celebrating. Instead, he spent Sunday night physically ill, convinced something terrible was coming. By Wednesday, he'd given it all back through increasingly desperate trades. Not because the market changed, because success felt like wearing someone else's clothes. Here's what nobody tells you. Most traders aren't afraid of losing. They're afraid of winning. Because winning means leaving your comfort zone. And your comfort zone, even if it's painful, feels like home. Your nervous system has a success thermostat. If you've been breaking even for 2 years, that's your setting. Go too far above it, and internal alarms scream, "Danger! Unfamiliar territory! Return to safety immediately." So, you sabotage. Not consciously. Your subconscious is far more creative than that. You'll 1. Size up recklessly. I'm on a hot streak. 2. Skip your stops. I've got a cushion now. 3. Trade garbage setups. I can afford a few lottery tickets. Give it all back within days. Confession time. I once turned 10K into 47K in 3 months. Felt like a god. Then gave back 35K in 2 weeks. Not because I forgot how to trade, because 47K wasn't who I was. My identity was a 15K trader. My subconscious corrected the error. This isn't about positive thinking. It's about expanding your capacity to hold success without panicking, like a glass that needs to grow before it can hold more water. Mike grew up hearing, "We're not rich people at every dinner table," worked his ass off, built his account to 50K. The moment it hit 51K, he felt physically sick. Not excited, terrified, like he was betraying his family's values. Within a week, down to 47K. His explanation? Market conditions changed. The truth? His identity pulled him back like gravity. Success expansion? Protocol: 1. Write your current normal account size. 2. Write 20% above that. 3. Notice what you feel: anxiety, guilt, disbelief. 4. Sit with that feeling for 5 minutes daily. 5. Let your nervous system adapt to the possibility. Your subconscious isn't your enemy, it's trying to protect you from the unknown. But the unknown is where profits live. Tonight's uncomfortable question: what if your biggest trading problem isn't that you're failing, but that you're succeeding beyond your comfort zone? What if every loss is just your identity trying to get back to normal? Sit with that. Then decide. Will you expand your capacity for success or keep proving your limiting beliefs right? Chapter 5. The Gambler's Disguise. Two traders sit side by side. Both clicked buy on AAPL. One's investing, one's gambling. The difference isn't the trade, it's what happens in their heads for the next 4 hours. The gambler checks price every minute, emotional roller coaster with every tick, no clear exit plan, sells when fear or greed peaks, immediately scans for next opportunity, takes screenshot if it works, deletes all evidence if it doesn't. The builder, predetermined entry, stop, and target, checks once at lunch, emotion-free execution, logs the trade regardless of outcome, reviews what worked and what didn't, builds data, not dopamine. Most retail traders think they're builders. They're not. They're gamblers with spreadsheets. They have strategies like alcoholics have limits, good intentions that dissolve under pressure. The gambler's toolkit: strategies that change weekly, risk management that flexes with mood, P&L checked more than a newborn, winners celebrated, losers forgotten, hope as primary indicator. The builder's blueprint: same setup criteria for months, risk rules written in stone, P&L checked at predetermined times, every trade logged and studied, math as primary language. Here's the test. Can you write down exactly what must happen for you to enter a trade? Not strong momentum or good setup. Exactly. Support at specific level plus volume above average plus indicator. Alignment plus time of day plus market conditions. If you can't, you're gambling with better vocabulary. Truth bomb. The market loves gamblers. They fund everyone else's yacht. Every random win hooks them deeper. Every loss just means they need a better strategy. Translation: different slot machine. I spent 3 years as a sophisticated gambler. Had 17 monitors, 42 indicators, 3 trading rooms, 0 consistent profits. Know what changed everything? 1 setup, 1 time frame, 1 rule set. Boring as death, profitable as Silicon Valley. The shift: stop seeking excitement, start seeking systems, stop needing to be right, start needing to be consistent. Your assignment, if you dare: for 1 week, take only trades that meet 5 specific criteria, not 4, not close enough. 5. Watch your account grow from boredom. Remember, the casino doesn't gamble. The casino has an edge and executes it repeatedly. Which side of the table are you on? Chapter 6. Risk is not math. The stop loss was set at 49.50. Clean, mathematical, exactly 1% risk. The stock hit 49.52, bounced to 49.54, then dropped to 49.41. Tom's mouse hovered over the sell button. His chest tightened, throat closed. Instead of clicking, he moved the stop to $49. Just giving it room, he told himself. 4 hours later, closed at 47.23. One emotional decision turned a $100 loss into $400. This happens every single day. Risk isn't the number in your spreadsheet. Risk is what happens in your nervous system when that number becomes real. It's the physical revolt your body stages when a position moves against you. The primal scream of "do something" that overrides 17 years of education. Most accounts don't die from position sizing formulas. They die from emotional sizing, taking bigger trades when desperate, moving stops when hopeful, averaging down when stubborn, closing winners when scared. The math was perfect. The emotions were expensive. The physiology of risk: 5% loss, mild discomfort, easily managed. 10% loss, stress hormones flooding, judgment impaired. 15% loss, full fight or flight, logic offline. 20% loss, desperation mode, anything to stop the pain. We don't fear losses. We fear what losses mean to our identity. Being wrong doesn't just hit your account, it attacks your worth. So instead of taking the $100 medicine, we fight reality. We defend our thesis while our account bleeds. We turn planned exits into unplanned disasters. Personal catastrophe. Lost $8,000 defending a $300 loss. Not because I didn't know better, because admitting I was wrong about TSLA felt like admitting I was wrong about life. The market charged $7,700 for that therapy session. The solution isn't better math, it's better rehearsal. Every clean loss is training, teaching your nervous system that safety comes from respecting rules, not avoiding pain. That small losses protect future profits. That being wrong quickly beats being right eventually. The loss reframe ritual. Stop hits. I executed perfectly. Feel the emotion fully, 30 seconds. Right? This loss protects my future. Rate execution quality, not outcome. Move on like a professional. You'll never eliminate the sting. It's evolutionary, but you can build tolerance, like a boxer who learns to take punches without panicking. The market will hit you. Your job is to not hit yourself harder, trying to hit back. Tonight's homework. Write down your 3 biggest losses. Next to each, write what emotion you were trying to avoid. That's your real risk. Not the math, but the meaning. Chapter 7. The Overtrading Addiction. Lisa's Wednesday, 47 trades. Net profit, 13. Emotional state, destroyed. Her husband asked how her day went. She couldn't explain why making $13 felt like losing $1,000. But every overtrader knows. It's not about the money. It's about what those 47 trades represent. Addiction disguised as ambition. You're trading too much. Not because opportunities abound, because sitting still feels like dying. That voice saying just one more quick scalp isn't opportunity knocking. It's your dopamine dealer. You're not chasing setups. You're chasing the high of being in action, of controlling something, of numbing something. Professional day traders, 1 to 3 trades daily. Retail traders, 10 to 20 trades daily. One group buys yachts, the other funds them. Overtrading isn't about finding more edges, it's about medicating discomfort. Boredom after a flat morning, pain after a loss. Anxiety watching markets move without you. So you manufacture action, force trades, mistake movement for opportunity. Turn the market into your therapist. The hidden cost isn't commissions, it's quality degradation. Trade number 1 gets your best analysis. Trade number 15 gets your exhausted leftovers. Like a boxer throwing wild punches in round 12, connecting with nothing but air and ego. My overtrading rock bottom. 73 trades in one day. Total profit, 3,200. Learned more about my need for control than any psychology book could teach. The market is an expensive therapist, but an effective one. Every trade costs more than money. Mental energy, finite resource. Emotional capital, depletes with use. Decision quality, degrades rapidly. System adherence, first casualty. The 3-trade protocol, maximum 3 trades per day, period. Not 3 longs, not 3 per strategy, 3 total. Write 3 on a post-it. Cross off 1 number per trade. When they're gone, laptop closed. No exceptions, no just checking. This feels restrictive because it is. That's the point. Constraint creates quality. Scarcity creates selectivity. Less action, more precision. Week 1 will feel like torture. You'll see missed opportunities everywhere. Week 2, you start seeing differently. Week 3, your win rate jumps. Not because you found better setups, but because you stopped taking garbage. Brutal truth. If you can't sit still for 4 hours without trading, you're not a trader. You're an action junkie with a brokerage account. Your edge isn't in doing more. It's in doing less, better. The market rewards precision, not effort. Be a sniper, not a machine gunner. Chapter 8. When pain trades for you. The loss hit at 10:47 a.m. Clean stop, good trade, just didn't work. Should have been a $500 lesson. By 10:52 a.m., Kevin was in 3 new positions, all double size, no stops. His rational mind watched in horror as his revenge trader took control. 4 hours later, $6,000. One emotion, $6,000. This is revenge trading, financial suicide with a buy button. Revenge trading isn't about the market. It's about you versus your pain. The market didn't hurt you. Your ego did. Your expectations did. Your need to be right did. And now that wounded ego wants blood. Its own blood, apparently. It starts with a wound. Not financial, emotional. That stupid loss where you knew better. That stop that triggered one tick before the reversal. That winner you held too long because greed whispered just a little more. Now you're not just down money. You're down spiritually. Embarrassed, furious, desperate to prove you're not a failure. The revenge trader's checklist, double position size, this one's guaranteed. Skip the stop loss, I'll watch it closely. Trade the opposite direction, the market owes me. Use tomorrow's risk today, I'll be careful later. Ignore every rule, rules made me lose. My worst revenge story, and I have many. Lost $800 on a textbook setup. Perfect entry, hit stop, market reversed immediately. Should have walked away. Instead, I went full kamikaze, max leverage, no stop, pure rage. 15 minutes, $15,000. 3 months of profits evaporated faster than dignity at a high school reunion. The psychology is primal. If your worth was tied to performance growing up, every loss feels like identity death. The revenge trade promises resurrection. It delivers cremation. But here's what I learned in that $15,000 therapy session. Revenge trading isn't about money. It's about unprocessed pain-seeking expression. The market is just the venue. The loss is just the trigger. The real wound is deeper. Prevention protocol. Tattoo this on your mouse hand. 1. Daily loss limit. Hit it equals laptop closed. 2. Big loss equals 30-minute minimum cooldown. 3. Before any trade after a loss. New trade, not a reaction. 4. Can't say it with conviction, can't trade. When the urge hits anyway, it will, right? I want to trade because I feel, I believe it will make me feel, The reality is, Your assignment. Calculate the total cost of your revenge trades. Not just money. Include the confidence lost, the rules broken, the trust destroyed. That number? That's your tuition for this lesson. Make it count. The market will test you tomorrow. Will you trade your plan or your pain? Chapter 9. Your money DNA. Jennifer grew up hearing money doesn't grow on trees every time she wanted something. Now, 30 years later, she sells every winning trade after 2% gain. Not because of strategy, because holding more feels like stealing from the universe. Her childhood is trading her account, and she doesn't even know it. Every trade you make is filtered through beliefs about money you didn't choose. They were installed before you could spell portfolio, and they're sabotaging your success in ways that feel mysterious but are completely predictable. The money virus checklist: money is hard to earn equals you overtrade, forcing profits. Rich people are greedy equals you give back gains to stay good. We're not wealthy people equals you sabotage when account grows. Money causes problems equals you create losses to avoid success. Stress. Easy come, easy go equals you gamble profits immediately. These aren't just thoughts, they're operating systems. Running 24/7, making decisions, filtering opportunities, capping success. Watch how it plays. Account hits new high. Instead of pride, you feel anxiety, guilt, like you're betraying your family's values, so you unconsciously create losses, not because the market turned, because your identity needed to return home. My money malware, you have to work hard for money. Result? I turned simple strategies into complex nightmares. Added indicators until charts looked like modern art. Traded 50 times a day to earn profits. Lost consistently until I debugged that program. This isn't therapy, it's system administration. Your relationship with money mirrors your relationship with yourself. Don't trust yourself, won't trust profits. Feel unworthy, won't hold wealth. Believe struggle equals virtue, you'll manufacture difficulty. The belief debugger: 1. Right money is 10 times fast, no thinking. 2. Circle the toxic beliefs. 3. Rewrite consciously. Money is stressful. Money is a tool I master. I don't deserve much. I create value. I receive value. Money is evil. Money amplifies who I already am. 4. Read new beliefs daily before trading. 5. Act from new beliefs, not old programs. Your brain doesn't care if beliefs are true, only if they're repeated. You've repeated the old ones for decades. Time to install updates. Tonight's deep work. Write your full money story. First memory, biggest trauma, family messages, secret beliefs about wealthy people. See the code that's been running your trades. The market will pay you exactly what your identity allows, not a penny more. Expand your identity, expand your account. Chapter 10. The Fatigue. No one sees. David followed every rule. Perfect discipline, clean execution. But something felt heavy, like trading through molasses. He couldn't explain why winning felt empty and losing felt numb. His edge was intact, but his soul was exhausted. This is emotional fatigue, the silent account killer that no strategy can fix. Trading doesn't just drain capital, it drains life force. Every decision leaves residue. Every loss adds weight. Every almost trade stays in your system. Stack enough unprocessed emotion, and you're trading with a psychological hangover that makes profits impossible. Symptoms of trading fatigue. Avoiding your journal, truth hurts. Craving action, but dreading execution. Winning without joy, just relief. Losing without pain, just numbness. Everything feels like effort. Clarity replaced by fog. It's like compound interest in reverse. Each unprocessed emotion earns negative returns. That stop loss that triggered perfectly before the moonshot. That winner you sold too early that ran 300%. That perfect setup you missed because you were revenge trading garbage. You tell yourself you're over it, moved on. But your nervous system keeps score, and eventually the weight becomes unbearable. That's when good traders make rookie mistakes. Not because they forgot how to trade, because they forgot how to feel. True story. Took a forced week off after minor surgery. Came back and made more in 3 days than the previous month. Not because the market changed, because I wasn't carrying 30 pounds of emotional baggage anymore. Your edge isn't built during performance. It's built during recovery. But most traders treat recovery like weakness. They power through, push harder, trade longer, until they break. The weekly emotional reset. Friday power hour. Complete trading autopsy. Write what you're still carrying. Get it out. Physical discharge, run, hit things, scream and car. Gratitude practice, especially for losses. Monday prep, clean slate protocol. Elite athletes periodize training, intense work followed by intense recovery. Traders need the same. Your mind is your equipment. Maintain it or it breaks. This weekend's assignment, list every trade that still bothers you, every missed opportunity that haunts you, every stupid mistake that echoes. Write them all, then burn the list. Literally, fire cleanses. Show up Monday carrying nothing. Trade like someone with no past. Because emotional baggage doesn't compound into wealth, it compounds into blowups. Chapter 11. Building your trading OS. Your strategy might work perfectly, on paper, in backtests, in theory. But strategies don't trade. People do, and people need systems. Not just entry rules. Life systems that create conditions for consistent execution. Most traders have a method but no environment, like having a Formula One engine in a shopping cart. Trading isn't what happens during market hours, it's what happens in the other 20 hours that determines if you can execute during the 4 that count. Your entire life is your trading system. Every habit either supports your edge or erodes it. The professional's daily. OS, 5:30 a.m., same wake time. Consistency beats motivation. 5:45 a.m. Physical movement. Clears yesterday's cortisol. 6:15 a.m. Meditation, gyre breathing, states create results. 6:45 a.m. Market prep ritual. Same coffee, same chair, same process. 7:15 a.m. Review rules and recent lessons. Prime the system. 9:30 a.m. Execute like a machine. No decisions, just recognition. 4 p.m. Complete review and reset. Capture lessons immediately. 9:00 p.m. Shut down completely. Recovery is part of performance. This isn't about becoming a robot. It's about removing variables. When everything else is systematic, trading becomes simple pattern recognition. But when life is chaos, even perfect setups become gambling. My system transformation. Added nothing to my strategy. Changed everything about my day. Sleep schedule, meal timing, exercise routine, social media limits. Result? Same exact setups, 60% better execution. The edge was never in the charts. Systems create freedom, freedom from decision fatigue, pre-decided, freedom from emotional hijacking, state-managed, freedom from inconsistency, same process daily. When your life runs on systems, your trading runs on autopilot. But most traders resist structure. They want flexibility, freedom, spontaneity, then wonder why their results are flexible, free-form, and spontaneously combusting. Design your trading OS, fixed wake time, negotiable with no one. Pre-market ritual, same sequence daily. Trading window, when you're sharpest. Review process, immediate, not later. Recovery protocol, active, not passive. This week's experiment, run the same routine for 5 days. Same times, same sequence, same everything. Watch your execution improve without changing a single rule about trading. Your edge isn't in your indicators. It's in your infrastructure. Chapter 12. Confidence without results. Real confidence doesn't come from your last winning trade. It comes from your last right action. The stop you honored when everything screamed, hold. The setup you skipped because it was only 90% there. The rule you followed when breaking it would have paid. These deposits compound into unshakable self-trust. Most traders ride the confidence roller coaster. Green day equals Superman. Red day equals imposter. That's not confidence, that's codependence. You're letting random price movements determine your self-worth, handing your power to market noise. The two types of confidence: results-based, fragile. I'm good because I won. Behavior-based, anti-fragile. I'm good because I executed. One shatters with a losing streak. The other strengthens with every right action, regardless of outcome. Think about surgeons. They're not confident because every patient survives. That's impossible. They're confident because they follow protocols, trust their training, execute procedures correctly. The outcome has variables beyond control. The process doesn't. Building your confidence account. Daily deposits. Rate execution quality 110, not profit. Weekly statements. Review best decisions, not best results. Monthly audits. Track discipline trends, not P&L curves. Quarterly reviews. Measure process evolution, not account size. I know a trader who graphs his discipline score alongside his P&L. Guess what? Discipline leads, profits follow. Sometimes by days, sometimes by weeks, but always. The confidence paradox. You don't need to feel confident to act confidently. Actions create feelings, not vice versa. Execute like a confident trader, and confidence arrives later. Wait to feel confident first, and you'll wait forever. My worst trading year taught me more about confidence than my best. Lost money, but gained discipline. Accounts shrink and grow, but the ability to execute regardless of circumstances, that's wealth that compounds forever. Confidence building. Protocol. Morning. 3 identity statements, who you're becoming. Pre-trade. Review recent good decisions. Evidence. Post-trade. Score execution, not outcome, reality. Evening. Acknowledge one growth moment, progress. Do this for 30 days. You'll build confidence that survives anything the market throws at you. Because it's not based on the market, it's based on you. Your assignment? List 3 trades where you followed your rules perfectly but lost money. Those losses? That's what real confidence looks like. Chapter 13. The 3-trade solution. Sarah averaged 23 trades per day. Active trader, she called herself. Broke trader was more accurate. Then she tried an experiment. Maximum 3 trades daily. No exceptions. Her first week felt like detox. Her second week, something shifted. By week 4, her account was up 40%. Not because she found better setups, because she stopped taking trash. Here's the constraint that changes everything. 3 trades per day maximum. Not 3 longs, not 3 per stock. 3 total. Period. This one rule will transform your trading more than any indicator, strategy, or course ever could. Why 3 works. Forces extreme selectivity. No room for B+ setups. Preserves mental capital. Decision fatigue is real. Eliminates overtrading. Can't chase if you're out of bullets. Creates natural reflection. What makes the cut? Builds patience muscle. Waiting becomes profitable. The market offers hundreds of moves daily. Maybe 10 are real opportunities. Maybe 3 fit your edge. Maybe 1 is truly A+. But if you've already blown through 15 trades by lunch, you'll miss it. Or worse, take it with depleted discipline. What happens? Each week, week 1, torture, missing everything. Week 2, adjustment, start seeing differently. Week 3, revelation, quality over quantity. Week 4, transformation, less stress, more profit. Professional snipers don't measure success by bullets fired. They measure by efficiency. 1 shot, 1 kill. Traders should think identically. 1 setup, 1 execution. My 3-trade transformation went from 30-plus trades daily to 3. Income doubled, stress vanished. Started finishing each day energized instead of exhausted. The market didn't change, my selectivity did. But here's what most can't handle: the boredom, the sitting, the watching without acting. It feels unproductive, like leaving money on the table. Good. That feeling is your edge developing. Implementation protocol. Write 3 on paper, tape it to monitor. Each trade, cross off 1 number. When all 3 gone, close platform. No checking, no just looking. Review your 3 decisions. Tomorrow, 3 new bullets. This isn't about limiting opportunity, it's about maximizing quality. When you only have 3 shots, you don't waste them on maybes. Your challenge, 1 week, 3 trades per day. Track not just profit, but clarity, stress levels, and decision quality. You'll discover something profound. Less really is more. Warning, this will rewire your entire approach. You'll start seeing the market differently, waiting differently, winning differently. You've been warned. Chapter 14, Design Your Edge Environment. Lisa traded from her kitchen table. Kids' homework everywhere. Dog barking, TV humming, phone buzzing. Her results, consistently inconsistent. Moved to a spare bedroom. 1 monitor, door locked. Phone in drawer. Same strategy, different environment. Results, 60% improvement in 30 days. Your space is your edge. Where you trade becomes how you trade. That cluttered desk covered in coffee stains and unpaid bills, it's programming your subconscious for chaos. The 6 monitors showing 16 time frames, they're fracturing your focus into confetti. Your environment isn't neutral. It's either building your edge or destroying it. The chaos trader's environment. Multiple screens, paralysis by analysis. Phone visible, distraction machine. Cluttered space, cluttered mind. No boundaries, everyone can interrupt. Random setup, different each day. The edge builder's environment. 1 primary screen, forced focus. Phone in another room, attention protection. Clean space, clear mind. Protected zone, trading is sacred. Identical setup, consistency breeds success. Every item in your visual field is sending signals. That motivational poster might be helping. That pile of bills, definitely hurting. Your brain processes everything, consciously or not. Design your space to reinforce who you're becoming, not who you've been. My environment evolution. Started, kitchen table, laptop, CNBC blaring. Now, dedicated office, 1 monitor, silence. Result, same strategies, triple the execution quality. But it's not just physical space, it's energetic space. The feeling when you sit down, the ritual of preparation, the sacred nature of what you're about to do. This isn't checking Facebook, this is your profession. Environment design, checklist. 1, visual, only trading-related items visible. 2, auditory, silence or consistent background. 3, physical, comfortable but alert seating. 4, digital, 1 chart, 1 time frame at a time. 5, energetic. This space means business. The market is chaos. Your environment should be order. When external calm meets internal calm, profitable decisions become automatic. This weekend's project. Strip your trading space to essentials. Remove everything that doesn't directly support your edge. Add only what reinforces discipline. Make it a temple to consistency. Remember, casinos spend millions designing environments that promote poor decisions. You're competing against that. Design accordingly. Chapter 15, The Review Revolution. Michael lost $50,000 before he started reviewing trades. Not because he was gambling, because he kept making the same 3 mistakes, invisible without review. 6 months after implementing daily review, up $30,000. Same strategy. Same market, different awareness. Review isn't homework, it's your edge multiplier. Most traders avoid reviewing like it's detention. They'll spend hours searching for new strategies, but won't spend 5 minutes understanding why the current one isn't working. That's like a basketball player never watching game film. Insanity. Why traders skip review? It's painful, facing mistakes hurts. It's boring, no dopamine hit. It feels like work after already working. They don't know how, never taught. They fear what they'll find. Truth stings. But here's the revolution. Your biggest edge isn't in the market, it's in your mistakes. Every loss contains tomorrow's profit. Every pattern holds predictable improvement. But only if you look. The professional's review process, daily, 5 minutes. Screenshot every trade. Tag, good decision or mistake. 1 sentence. What did I learn? Score, execution quality, 1/10. Weekly, you have 30 minutes. Pattern recognition, what repeated. Emotional trends, where did feelings drive? System adherence, rules followed or broken. One thing to improve next week. Monthly, 2 hours. Deep dive, categories of mistakes. Success patterns, what's working. System adjustments, what needs tweaking. Trading psychology, what beliefs showed up. My review revelation, discovered. I lost money every Friday afternoon, not because Fridays are bad, because I was mentally done but kept trading. Solution, no trades after 2 p.m. Friday. Instant 15% improvement. The goal isn't judgment, it's pattern recognition. You're not looking for what went wrong. You're looking for what goes wrong repeatedly. There's gold in those patterns. Review tools, trading journal, non-negotiable. Screenshot folder, visual memory. Mistake tracker, pattern finder. Lesson log, a wisdom accumulator. Without review, you're driving blind. With review, you have GPS showing every pothole you've hit before. Your assignment. Review your last 20 trades. Tag each, planned or impulsive. Find the ratio. That number explains your results better than any market analysis. Remember, the best traders aren't the ones who never make mistakes. They're the ones who never make the same mistake twice. Review is how you get there. Chapter 16, Master Your State. 2 traders, same setup, same entry. One makes money, one loses. The difference? Their internal state when they clicked buy. Trading isn't just about setups. It's about the state you bring to those setups. Master your state, master your results. Your strategy is only as good as your ability to execute it. And execution depends entirely on your psychophysiological state. Trade from anxiety, get anxious results. Trade from clarity, get clear results. The market doesn't care about your setup if your nervous system is in chaos. State determines everything. Stress state equals impulsive decisions. Fearful state equals premature exits. Greedy state equals held too long. Clear state equals clean execution. Confident state equals trusted system. But most traders treat state management like weather, something that happens to them. Professionals know better. They engineer their state like athletes engineer performance, not hoping to feel good, creating the conditions for peak execution. Pre-trade state protocol. Breathing, 4-7-8 pattern, 5 rounds, activates parasympathetic. Movement, 20 jumping jacks, clears stress hormones. Posture, shoulders back, chest open, confidence physiology. Visualization, see perfect execution, neural rehearsal. Affirmation, I trade my plan with clarity, state anchor. This takes 3 minutes. 3 minutes that determine whether you trade like a pro or panic like an amateur. My state management story, used to trade first thing, coffee wired and market reactive. Now, 20-minute morning routine before touching keyboard. Same strategies. 50% better execution. The edge wasn't in the charts, it was in my nervous system. The market will test your state constantly. News breaks, positions reverse, stops hit. Your prepared state is your only defense against emotional hijacking. State maintenance tools. Hourly check-ins. Rate state 110. Breath breaks every 30 minutes. Posture resets. Trading is physical. Energy management. No trading when depleted. State minimums. Only trade 7+ states. You wouldn't perform surgery angry. Don't trade tilted. Today's experiment, rate your state before each trade. Only enter when 7 or above. When below 7, use tools to elevate before trading. Track the correlation between state scores and trade quality. Your edge isn't just your system, it's your ability to execute that system from a peak state. Everything else is gambling with good intentions. Chapter 17. Stop hunting. Setups. The best traders aren't hunting, they're waiting. Like a spider who builds the perfect web, then sits. Not chasing, not searching, just prepared when opportunity arrives. Most traders are hunters, exhausting themselves chasing shadows. Be the spider. Every morning, Tom scanned 100 stocks, watched 20 charts, took 10 trades, barely profitable, switched approach. 5 stocks, 3 setups. Wait for perfect alignment. Trades dropped 80%, profits rose 400%. He stopped hunting setups and started letting setups find him. The hunter's curse. Scans everything. Analysis paralysis. Sees patterns everywhere. Illusion. Forces trades. Need for action. Always busy. Never profitable. Exhausted by noon. Decision fatigue. The spider's way. Builds specific criteria. The web. Waits for exact match. Patience. Strikes with precision. Execution. Conserves energy. Sustainability. Consistently profitable. System works. Hunting feels productive. You're active, engaged, working hard. But the market doesn't pay for effort. It pays for precision. And precision comes from patience, not activity. My hunting addiction. Used to run 8 scanners, follow 50 traders, watch every moving stock. Felt like a professional. Results like an amateur. Now, 3 stocks, 1 pattern. Wait. Results speak for themselves. The shift from what can I trade to what meets my criteria, from don't miss anything to only take perfection. From predator to prepared. Building your web, setup criteria. Price structure, exact pattern. Volume confirmation, specific increase. Time of day, when edge strongest. Equals market context, trend alignment. Risk to reward, minimum ratio. All 5 must align. Not 4, not close enough. All 5 or no trade. This isn't limiting, it's focusing. The patience paradox. The less you look, the more you see. When you stop hunting everything, you start recognizing perfection. Quality becomes obvious. Setups announce themselves. This week's challenge: pick 3 stocks maximum, define 1 setup. Wait for perfect alignment. Take only those trades, nothing else. Watch your stress vanish and profits appear. Remember, the best hunters in nature don't chase. They position themselves where prey must pass. Then they wait. Be positional, not reactional. Chapter 18. The Weekly Reset. Sunday evening. While amateur traders are dreading Monday, professionals are preparing for it. The weekly reset isn't just planning, it's strategic advantage. It's the difference between playing defense all week and playing offense from the open. Most traders start Monday reactive, check futures, scan news, hunt for gaps, already behind, already emotional, already primed for poor decisions. They spend all week catching up to prepared traders who mapped the battlefield Sunday night. The Sunday strategic session. Review. 30 minutes. Last week's trades. What worked, what didn't. Emotional patterns. Where did feelings drive decisions? Lessons learned. What must change? Win rate versus reset. 20 minutes. Clear physical space, clean desk, clean mind. Clear mental space, journal any baggage. Clear emotional space, release last week. Set intention. Who am I becoming this week? Prepare. 40 minutes. Key levels on your stocks, support, shock resistance. Economic calendar, know the landmines. Earnings, events, prepared not surprised. Process goals, not profit goals. My Sunday transformation: used to drink Sunday away dreading Monday. Now it's my secret weapon. 2 hours of preparation saves 20 hours of reaction. Monday isn't scary when you're ready for it. This isn't about predicting, it's about preparing, having plans for multiple scenarios, knowing your levels, understanding the landscape, starting ahead instead of behind. The reset ritual. Same time every Sunday, consistency. Same place, sacred space. Same process, no decisions. Phone off, deep focus. End with confidence, ready for war. By Sunday night, you know exactly what you're looking for. Where you'll enter, where you'll exit. What would change your mind? The week's trading is essentially done. You're just waiting for the market to cooperate. Amateur, Monday, scrambling, reactive, hopeful. Professional, Monday, prepared, proactive, dangerous. Your assignment. This Sunday, spend 90 minutes preparing. Map every level, review every lesson, clear every baggage. Enter Monday like a professional athlete entering the arena, prepared, focused, unstoppable. The weekly reset isn't optional, it's your edge. Use it or lose to those who do. Chapter 19, Building Trading Wealth. Real trading wealth isn't built in home runs. It's built in singles, boring, consistent, predictable singles. While everyone else swings for fences, professionals get rich hitting singles, because singles compound. Home run swings compound into strikeouts. The math is simple. Small edge X, high frequency, X, long time equals fortune. But it requires something most traders can't give. The willingness to get rich slowly, to embrace boredom, to trust process over payoff. The home run trader needs the big win, ego food, takes huge risks, YOLO mentality, inconsistent results, feast or famine, screenshot moments, social proof, usually broke, math doesn't lie. The singles hitter, consistent small wins, base hits, controlled risk, preservation first, predictable results, boring account growth, no screenshots needed, quiet confidence, steadily wealthy, compound effect. Watch a professional's account, plus 0.5%, plus 0.3%, minus 0.2%, plus 0.4%, plus 0.6%. Boring as watching paint dry. Zoom out 5 years, up 400%. The eighth wonder of the world isn't compound interest, it's compound discipline. My wealth realization, spent 3 years trying to double my account quickly, failed repeatedly, switched to 1% monthly target. Too slow, I thought. 5 years later, financial freedom. Slow is smooth, smooth is fast. But here's what kills most traders: comparison. They see someone post a 100% gain and feel inadequate with their 2% month, so they abandon what works to chase what's exciting. Trading wealth isn't built on excitement. The wealth-building formula: define your edge, what actually works. Size for survival, not excitement. Execute boringly, same thing daily. Measure quarterly, not daily. Trust the math, it never lies. The market pays patient players. It bankrupts impatient ones. Choose your side. Wealth mindset shifts. Stop measuring days, start measuring years. Stop chasing percentages, start protecting capital. Stop seeking excitement, start embracing systems. Stop comparing to others, start competing with yesterday. Your challenge: calculate what 1% monthly becomes over 10 years. Now calculate what chasing 10% monthly, and inevitably blowing up, becomes. Which path are you on? Remember, tortoises beat hares, singles beat home runs, boring beats brilliant. Get rich slowly or get poor quickly. There's no third option. Chapter 20, Your Final Evolution. You started reading this seeking profit, but if you've internalized these lessons, you've discovered something more valuable. You've discovered who you need to become. The market was never the problem. The person you were was the problem, and that person is dying, making room for who you're becoming. This transformation isn't about your account. It's about your character. Every trade has been building something beyond money, building someone who deserves money, someone who can handle success, someone who trades from strength, not desperation. The old you traded from ego and emotion, chased every shiny object, blamed the market for results, needed excitement and validation, focused on being right. The new you trades from system and discipline, waits for edge with patience, takes full responsibility, finds peace in process, focused on being consistent. This isn't the end, it's your beginning. The moment you stop trying to beat the market and start mastering yourself. When you realize profits aren't the goal, they're the byproduct of who you become. From here, the choice is binary. Return to old patterns, old beliefs, old results, or step fully into this new identity. The trader who acts from clarity, who trusts their system over their feelings, who shows up consistent regardless of yesterday. Your final assignment: write a letter to yourself 1 year from now. Tell them who you're leaving behind, what beliefs you're releasing, what habits you're installing, how you'll measure success beyond money, who you're becoming. Seal it, date it, open in 365 days. You won't recognize the person who wrote it because they'll be gone, replaced by someone better. The market continues. It doesn't care about your transformation, but you're different now. You see its patterns, respect its power, trust your process. You've graduated from trying to make money to being someone who naturally does. Your final trade isn't with capital, it's with identity. Close your position in who you were. Open your position in who you're becoming. Hold through every drawdown. Add to it when tested. Never close it. The market has taught you everything about risk, about patience, about humility, about yourself. Now go teach others through your example, not your words, your consistency, not your profits, your peace. Welcome to mastery. It's not a destination, it's a way of being, and you've earned the right to live it. Now stop reading, start being. The market opens in 12 hours. Show up as who you've become. The journey continues, but you're no longer the same traveler.